Take a close look at this chart from McKinsey. By 2030, AI's share of data center power demand is projected to jump to 71%. But that's not even the real story. By 2030, the new AI workload all by itself will demand 156 gigawatts of power. The entire non-AI internet, I'm talking every non-AI cloud, every streaming service, every website, will only use 64 gigawatts. Let that sink in. The AI revolution will consume 2.4 times more power than the rest of the internet combined.
This isn't just growth. This is a violent takeover of our energy grid, and it's sparking a secret AI real estate boom, a modern-day gold rush for land and, more importantly, for power.
In our last documentaries, we saw the gold miner, OpenAI, and the shovel seller, Nvidia. Today on Money Empire, we're following the money to the land itself. We'll expose the $100 billion per quarter spending spree by the Big Four and reveal how you can actually invest in the new oil rigs of the 21st century.
So here's the question. What's the smarter investment for the Money Empire portfolio? The AI software itself or the physical power plant that runs it? Let me know your bet in the comments below. Now, let's dig into the brutal economics of AI's physical footprint. So let's really look at this chart again. The total AI workload is projected to be 156 gigawatts by 2030. Now, what is a gigawatt? I mean, it's a billion watts, which is roughly the output of one nuclear power plant. So the AI industry needs what? 156 new nuclear power plants? In the next 5 years? Yeah, that's insane. And it's not just McKinsey. Goldman Sachs confirms this. They're projecting a 160% surge in data center power demand by 2030. This is a problem on a scale we have just never seen before.
So, who is building all this? Well, it's the Big Four, the hyperscalers. Microsoft, Amazon, Google, and Meta. And they are in just a brutal war for land. Get this, they are collectively spending over $100 billion in a single quarter. Not a year, a quarter.
I mean, just look at the numbers. Microsoft is leading with $35 billion, Amazon with $34 billion, Google with $24 billion, and Meta with $19 billion. This isn't just spending. This is a full-scale industrial mobilization, bigger than the budgets of entire nations, all to build this new AI infrastructure from scratch.
So how does a smart Money Empire investor like you get in on this? You could buy Nvidia, sure, the shovel seller. We talked about that. But what about buying the rig itself? In this new oil boom, the data center is the oil rig. And these are often owned by data center REITs, R-E-I-T. R-E-I-T. It's just a fancy word for a real estate investment trust.
Think of companies like Equinix or Digital Realty. They are the new ultra-high-tech landlords for the entire tech industry. They build these massive, high-security facilities, and then they just rent out the space, the power, and the connectivity to the Big Four. It's a pick-and-shovel play on the land itself.
But you can't just build a data center anywhere. And this is the critical bottleneck. The new gold is not land. It's access to power. This is where most of these billion-dollar projects just fail. Goldman Sachs notes that transmission, the actual power lines, is a major hurdle. New natural gas plants take 5 to 7 years just to get online and connected to the grid.
The Big Four are building these gigawatt-scale campuses on plots of land bigger than 4 million square feet. And they are hitting a wall, a power wall.
So, who pays for this? Well, you do. This insatiable hunger for energy puts AI in direct competition with public utilities and with your home. In the US, data centers could account for 13% of all electricity consumption by 2030. This, Mounting strain on the grid is why analysts are warning of rising utility bills, a greater risk of blackouts, and, well, a new, uncomfortable reality where your air conditioner is competing for power with an AI model. Kind of weird, right?
This is the physical, brutal cost of the AI revolution. It's a war for resources. If you want to keep following the money to see where it really flows, subscribe to Money Empire. We break down the real-world economics behind the hype every single week.
So, how do the Big Four solve this power crisis? Easy. They bypass the grid entirely. They are going nuclear. And I am not kidding. In a stunning move, Amazon bought a 960-megawatt data center campus at the Susquehanna nuclear power plant for $650 million. They are not just buying power from the plant, they are buying the plant itself.
Microsoft is going even further. They signed a 20-year agreement to restart the dormant 3 Mile Island nuclear facility, just to power their data centers. Yeah, that 3 Mile Island.
And they aren't stopping at old tech either. Microsoft, Amazon, and Google are all investing heavily in small modular reactors, SMRs. They are, in effect, becoming private, 21st century utility companies, building their own dedicated carbon-free power plants to feed their AI. But even fission isn't the final frontier. Microsoft has made the ultimate sci-fi bet, a power purchase agreement with a fusion energy company, Helion. They are betting they can power their data centers with a fusion reactor by as early as 2028. I mean, talk about a long-term plan. So, we talked about the REITs, right? The landlords. But what's inside the building? You've got Nvidia's GPUs, sure, but what about the stuff that keeps them from melting? These new AI data centers run so hot, they're literally melting traditional infrastructure. This creates a whole new pick-and-shovel market. Companies like Vertiv, they make the massive, industrial-scale liquid cooling systems. Or Eaton and Schneider Electric, they build the power management hardware. You know, the heavy-duty, unsexy stuff that handles the electricity from the grid to the chip. It's not glamorous, it's not AGI, but it's a pick-and-shovel play on the plumbing and air conditioning of the gold rush. And it is exploding. And this brings us to one of the wildest, most overlooked angles of this entire boom. For decades, utility stocks, the companies that, just sell electricity, were the most boring investments on earth. They were for, your grandpa's retirement fund. Not anymore. Suddenly, companies like Constellation Energy, they're the ones who own the Susquehanna plant Amazon bought into, they've become high-growth AI stocks.
Why? I mean, think about it. They are the only ones who actually have the power to sell. They own the nuclear plants. It's like they're the owner of the only gas station for 100 miles, and the Big Four are all rolling in on fumes. It's a complete shift in how Wall Street sees these boring companies.
And just when you thought we were done, there's one final hidden cost. AI doesn't just eat power, it drinks water. A lot of water. See, all that cooling, that's water. Water is a primary way they keep these massive data centers from, well, melting. It's estimated that a single complex AI query, just one, can consume half a liter of water. Half a liter.
Now, scale that to trillions of queries. This is the next resource war. A hidden thirst that will put multi-billion-dollar data centers in direct competition with local farms and local people for a single life-sustaining resource. Kind of scary, right?
So, here is the final verdict from Money Empire. The AI revolution is not just digital. It is a physical, brutal war for physical resources. The new oil rig isn't just the data center. It's the nuclear plant that powers it and the river that cools it. The gigawatt is the new barrel of oil, and the Big Four are positioning themselves to become not just tech companies, but the 21st century's new energy and utility empires.
We followed the miner, OpenAI, the shovel, Nvidia, and the land, data centers. But what about the people? In our next documentary, we investigate the AI job apocalypse.
Which professions are truly safe and which ones are already on the brink of extinction? You won't want to miss